Good morning, folks. Thanks for joining me. It is Thursday, 8:02 a.m. Chicago time, March 19th, 2015, the day after the FOMC announcement. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. Quick rundown of the news as always. The Fed's dot plot shows gentler path of rate rises to raise interest rates far more slowly than previously. U.S. dollar manages to recoup some of its steep losses from late Wednesday. The Swiss National Bank keeps policy steady as expected, but to remain active to counter the Swiss currency strength if needed. SNB statement reiterated that the Swiss franc currency rate remains high and overvalued. SNB's President Jordan said that there was no real alternatives to negative rates right now and would retain the current interest rate level for the time being. He reiterated that negative rates would help to weaken the Swiss currency. Again, this is in line with what I've been saying for quite some time, that these banks are in a battle, in a currency battle. Norway's central bank surprises everyone and keeps policy steady. The currency soars in the aftermath for its best percentage gain in 70 years against the euro. Initial jobless claims came in this morning in the U.S. at 291,000 versus 293 expected. Continuing claims at 2.42 million versus 2.4 expected, so slightly better. Q4 currency account comes in, current account comes in at negative 113.5 billion. And then finally, I want to remind everyone that it is Quad Witching Friday. Quad Witching Friday tomorrow. So tomorrow you have expiration on multiple fronts. You've got your futures, your single stock futures, options, and so on, all coming to a close. So this whole week is generally, especially for me, throughout my career, this week has been a more difficult, more choppy, more frenzied trade. In fact, if I was to take time off, it would be 4 times a year, and it would be this week. Coming into Thursday, most of the roll has already happened, but you still have some hedging, some delta hedging, and so on. So your readings on your volume delta and so on are not to be fully trusted. So that's what we're looking at currently. Let's look at what we have technically. You should be seeing my charting screen for the ES, and a couple things I want to run through. Here's what we've done. We've put in that high at 21.10 quarter. The March contract would be 21.1775, 7.5 point premium difference. And we've sold off 20.3075 was the low, and we have kind of recovered some of this. We've moved from the lower HVN zone to the middle. And yesterday, of course, we had this, the market opened right in that middle zone and pushed through. 2077 was expected to be the cutoff line, the over-under line for sellers. There was some confluence here at 2077. The expectation was this was a fib for some of those who watch fibs, but also a key LVN zone. I'll show you that in a different format. Let's look at this in a, where's my, that's just a study. Here it is. So these are monthly profiles, okay? This is what's happened every month. So you have your, this should be coming through very clearly in vivid color. You have a profile that's created every month. The color bands represent days within the month. And so we have, we've had a pretty fat January, very steady balance there. February was a runner. We put in new highs in February. In March so far, we've had almost 3 weeks in March. And so far, what we've done is we've traded inside of February. And in uh, the process so far has been to push through this small gap zone that we put in, um, and then to test lower. And what it did is it pushed through the monthly value low by just a bit, maybe 5 handles or so, and then it came right back up and pushed through this LVN zone again. It found balance in the LVN zone here at 2066, 67. But then it put in this low volume node right here between 74, 75, and 77, and this was a key area yesterday. We ended up trading above it and pushing through and out of the monthly value. Uh, moved out of the monthly value and are pushing on the high side. This looks like it is gearing up to take out new highs. Yesterday we took over several areas. Not only did we take out the 2077 key area, which really was my estimate for the high side, for the far side, on the upside on the FOMC was 2077. The FOMC scene of the crime is 6250, 6250 to 77. Gives us basically our range for that move, 12 points, but it definitely exceeded it. It definitely surprised a lot of people. Yesterday's range for the day session was 47.5 points, very unusual. So if we look at this chart and look at our volume profile for ranges, you can see that the norm is between 20 and a quarter and 6 and a quarter. Norm being the first sigma of ranges. The second sigma, which is 95.45% of the data set, representing 95.45% of the curve at 30 and a quarter, and yesterday pushed 47 and a half. Very, very unusual, very impulsive move, but very methodical too. It had its first push, which I've marked here. It had its first push to 90 quarter. So I've marked this as the FOMC announcement high. Very important level to carry forward. This level will be carried forward until it's retested on a different day. It was retested yesterday, but we still need to retest it on a different day. The FOMC SOC, which is the scene of the crime here, it is marked at 92.50. We've pushed through on the first impulse of the FOMC announcement to 90 quarter, pulled back, and then we had our continuation move to 99.75, just below the 2100 mark. And in doing so, we've pushed through several template days from the past, a balanced day on the 5th, and then we started to breach into the upper distribution on this, 2103 being the key level in the area. 2103 is the last high volume node before new highs. But now that the market's above 2077, and if it holds above 2077 and continues to trade these high volume areas, new highs are imminent. So here you have it, 2077 pushing through, approaching the high volume node on the upside. We have a poor high, not too poor, but a fairly weak high on the all-time high. This looks vulnerable to me, as I said on day trading radio on Monday on my weekly run. On that show, I said, if we break above 2074, 75, 2077, and you're short, you might want to consider options to hedge your position, and this is what I meant. So, overall, pretty methodical drop, pretty methodical rise, frustrating trade yesterday morning, and then, of course, the FOMC comes in and just blasts this market out of the water. So It's all about semantics now with the FOMC. Is it patient? Is it measured? Is it what is it? You know, it's all about the words that they use. And I find that, I don't know about you guys, but I find that incredibly comical that our entire financial complex is hinged upon which synonym the FOMC decides to put into its meeting minutes and its statement. It's quite enticing. Anyway, looking at today, which is what you're here for. We can't trade the past. Looking at today, if we look at what we've done since yesterday, we've made another attempt at the high overnight. We put in there was some action here on the Asian session, and then overall, the market has taken a negative tone until the European Open, and the European Open pushed a little bit higher, but overall the market's retracing the poor auction that took place. Look at the volume here on some of these prices. The volume is really awful. There was nothing that traded at some of these prices here. Let me pull that up. Volume of price. This has changed quite a bit. Anyway, I'm trying to pull up the volume at price. Here you go. So if we look at this, we've traversed a very significant area on very little. The normal way that the ES trades is you get anywhere between 6,000 and up per price, and 6,000 is considered an LVN in the ES. And you look at what happened. This is tick data, unfiltered tick data by IQ Feed, and it looks like nothing really traded here. Hundreds have traded at these prices all the way up. To me, that's the definition of a poor auction. I expect that the market will retrace this. I'm not saying it'll do so today, but the expectation is that it will likely return to the scene of the crime to put in a base. If, for example, I was looking to get long 100,000 contracts in the S&P, I wouldn't want this below me. I would feel a lot more confident if it trades through and we find other buyers, or we find that sellers are not too motivated to push it back through 2059 and take out the FOMC low of 2052.25 before I committed those shares, those contracts. So that's what we have. We have a poorly auctioned area, a very wide poorly auctioned zone. You can treat this almost like a gap zone. Going forward, and so it's important to market. Overall, the tone coming into today is bearish. The point of control did not move up yesterday, not enough traded to push the point of control up. The expectation is that we open small attempt higher, and I'm looking for this zipper to drop. Looking for the zipper to drop through here, for the market to drop through this single print zone that we see here very clearly on the market profile chart. Right here, 2083 all the way down 2062.50, where the scene of the crime is. This area remains weak below from an auction perspective. Looking for that to retrace at some point over the next week or so. I can't put a timeline on it, but my guess would be about a week or so. Overall, the volume has exceeded yesterday's volume exceeded the norm, but it exceeded the most common volume, which was about 1 million contracts per day, but it did not exceed the one standard deviation limit of 1.6 million shares. Contracts. Yesterday we traded 1.5 million contracts on the day session, so participation was not reflective of the range that was created. So this morning, two key hypos. One, we test up early towards the close, we fail, and we start to roll over. we start to roll over and we start to drop through that 2082 and push through to 2077 as the first target. And if we're lucky, as day traders, we start to push through to 2062, although I don't expect that, not with options expiration tomorrow. I expect this to be on lockdown until tomorrow. And the second hypo is a quick test below, a little dip of our toes in the water below 2082 into 2081, rotate back up and start moving towards the point of control, the HVM put in yesterday, and start pushing this area. Overall, I expect today to be an inside day. I do not see this pushing much higher. If it does, and I'm open to it, I'm not saying I wouldn't trade it. I'd be looking for 2103 as the key target above before this stalls out. Remember, tomorrow we do have options expiration. We have quad witching, so I expect a lot of volume to be pushing this around. A lot of interest in hedging and so on. A quick look at the Euro stocks. Euro stocks have been in balance since the 11th and have been sitting in balance. So you can see this pop here on the open this morning. But then it kind of tapered off and is trading sideways. It's right in the middle of this balance zone. It's got multi HVN prongs here. 36.50 45 is the key one below, and the one that was tested this morning right up here at 36.88. Mostly the euro stocks are stuck in their tracks, so it's not really. I don't see that as a land of opportunity. Looking at the Bund real quick, the Bund is the 10-year, the German 10-year, and a very, very popular product. The Bund made new all-time highs yesterday, pushing yields down on the 10-year notes in Germany. But overall, it's been in this balancing zone since the 9th. It pushed through, made new highs, and has retraced back to the previous all-time high at 157.75, pushed to 157.46, and then took off yesterday as money shifted into this product. And then today, it's basically retracing what it has done. The low of today's Bund trade was the key LVN at 158.45 to the tick. Very methodical trade. Another great product from Eurex. Anyway, I'll leave you with that. I don't have much to add on crude. Crude has been difficult to read, in my opinion. It's been a very interesting trade, but it's been very difficult to read at these prices. Very turbulent prices down here. So I'll stay away from commenting on it. I'm mostly scalp that product these days. Anyway, I'll leave you with that. Good luck, and I'll catch you tomorrow.